Hello everyone, this is Suslov, Head of Capital Markets at AD Mortgage with our AD Weekly Digest. As always, we're here to shed more light on economic events, mortgages and market forecasts. ADP employment data showed US companies continued to hire at a high level. We got 208,000 versus 200,000 even expected. Employment rate is down as well, 3.5% versus 3.7% forecasted. Have we reached peak hawkishness by the Fed, and is a soft landing still a possibility? Seems to be at the forefront of the investor's mind. Markets are still forecasting a 75 basis point rate hike at the November FOMC meeting and a peak rate of 4.5 to 4.75% in the mid-2023. Equities and bonds both fell last week as investors listened to Fed officials reiterate their commitment to combat inflation long term. As for A&D updates, we have expanded our eligibility criteria with 90 LTV for our non-QM ALDOC loans. A&D is planning to launch HELOC product in the near future. We would advise to review your pipelines for the borrowers whose properties have appreciated in the past year and now they have an opportunity to extract more equity out of their homes. I want to remind everyone, A&D is a strong bid for scratch and dent loans. Please make sure to reach out to Billy and share your pipelines with him. You may find his contact by clicking the link to this digest. This week we're closely looking at CPI numbers and jobless claims. Turning this to Billy at this moment to get more details on numbers and further expectations. Hello Billy, how's it going?
Hello, Alex. It's going really well here. Columbus Day holiday couldn't have come at a better time for me. So the Treasuries reversed and began to rally from high yields they posted last Tuesday, the 27th. I sense that something bigger might be percolating since the 5-year traded at 424, the 2s and 3s into the 430s and 440s, and with year-end Fed funds projected to be between 4.25 and 450, that's sort of a relationship between current yields and current or projected Fed funds levels have produced major market turns in June and August, so why not now? In just 5 days, the 5-year rallied nearly 50 beeps, its largest rally since August 2nd when it was yielding in the 250s. The curve was steepening, the dollar had reversed from a 20-year high, and things were looking up, I felt. But from low yields made on Tuesday morning, more than half the gains have been given back even before Friday's BLS jobs report. What I found to be odd last week was that on Tuesday, JOLTS job openings came in at a level that was its lowest since August of 2021 and further below the estimates than any JOLTS number had been since at least 2012. On Thursday, we learned that jobless claims, the weekly number, was above expectations for the first time in 10 weeks. So I figured with those two reports as a backdrop, traders might have expected a poor BLS report, but obviously they didn't. Markets sold off right before it, and obviously they were right. Again, making one wonder if the playing field is really level, though it's the field we have to play on. So the Fed is what's driving the markets right now. The two things driving the Fed are jobs and inflation. Past week was all about jobs, which are still strong, and the current one is all about inflation with PPI on Tuesday or Wednesday, I believe, and CPI on Thursday. With 2 more rate hikes before year end, everything points to a funds rate above 4%. As you said, as high as 4.75% by next year. So absent a truly unprecedented inversion in the yield curve, both with regards to time and depth, it's hard to make a case for much relief from long-dated interest rates, including mortgages. Things are certainly getting interesting, Alex, and well, with that, I'll just kick it back to you.
Billy, indeed we live during interesting times. Curious to see what the CPI would be this month and what effect that would cause to mortgage markets. I wish everyone a great week. Make sure to stay on top of your pipelines and be careful with locks. Make sure you don't let those expire. I'd like to remind everyone, Billy and I will be in Nashville for annual MBA conference October 24th to 25th. We'd like to set some time on our calendars or meet at A&D cocktail party Monday 24th at 6 p.m. Click on the link at this digest for more details on the event. Make sure to follow us on YouTube channel, like this video and subscribe to Billy's daily market newsletters to stay on top of the capital markets events. Thanks everyone, it was Suslov, Head of Capital Markets at AD Mortgage. Stay tuned.